Hey everyone, and welcome to The Explainer. Today we're diving straight into a highly charged debate that is sending absolute shockwaves through the financial world. Okay, let's dive into this. To understand their premise of a surveillance state, we're going to systematically dissect this argument step by step. Part 1. The digital dollar concept, focusing specifically on the view for 2026. So the source materials draw a really sharp line in the sand here. When most of us hear digital dollar, we probably just expect convenience, faster transactions, seamlessly splitting a dinner bill. But these critics argue that expectation is a dangerous illusion. They claim a CBDC isn't an upgrade for us, but the ultimate tool for the IRS to actually monitor our spending. They're calling it a hidden tax on your financial freedom and the actual foundation for a surveillance state. Moving right along to Part 2, automated tax compliance and the supposed risk to deductions. Now, what's really interesting about this is how granular the claims get. The authors warn of this idea of automated tax compliance, where basically your transactions are nickeled and dimed by the government before the money ever even hits your bank account. They argue that completely legal, everyday tax strategies, things like the 14-day rental rule or standard small business write-offs, could theoretically just be automatically blocked or eliminated by this new system. Which brings us to Part 3, the dangers of programmable money, or the mechanisms of control. This builds directly into what is probably the most terrifying concept for these critics, programmable money. According to the texts, a CBDC isn't just a regular digital fiat. It's currency with conditional rules baked right into its code. I mean, think about that. Imagine a reality where the government could just put an expiration date on your savings to force economic stimulus. Or what if they outright blocked specific purchases? To the authors, this represents the ultimate mechanism of behavioral control. Part 4. The National Debt Catalyst. Let's look at the economic rationale. $39 trillion. Just let that number sink in for a second. It is massive. A commentator named Brian, who is a CPA from the channel Hidden Tax, cites this staggering national debt as the primary catalyst for a CBDC rollout. He argues that any government saddled with that level of debt is fundamentally desperate for visibility. They need total visibility into every single transaction just to maximize their tax revenue. But what about the immediate pressure point? Well, that's $11 trillion. The source claims this is the specific amount of debt the government desperately needs to refinance right now. It's this immediate liquidity crisis that they argue is really forcing the government's hand toward total financial surveillance. And this brilliantly illustrates the core theory here. To quote the text directly, when the government must refinance $11 trillion in debt, your privacy becomes the collateral used to keep this house of cards standing. They are literally arguing that your financial privacy is being monetized through a digital dollar simply as a state survival mechanism. Finally, Part 5, building a financial fortress and the author's proposed solution. So, the crucial point is, how do you avoid becoming a victim to what they call economic theater? Well, Brian the CPA offers a twofold exit strategy. First, you've got to keep the math in your favor by owning hard, non-programmable assets, things the government cannot print or program, like physical gold. Second, he says you need to stay informed by subscribing to the Hidden Tax channel. It's a very direct pivot from a broad systemic warning to a highly specific, actionable defense. We've just unpacked the anatomy of this argument straight from the source. We've seen exactly how they link digital convenience to government surveillance, tax automation to loss deductions, and the sheer weight of the national debt to the end of our financial anonymity. It is an incredibly heavy, compelling narrative, but it leaves us with one massive question to ponder. As we barrel toward this highly digital future, is a digital dollar truly the end of privacy as these critics claim, or is it simply the inevitable evolution of money? It's a question definitely worth exploring further on your own. Thank you so much for joining me for this explainer. Keep asking the hard questions, and I'll see you next time.